All right, welcome everyone. It's Tuesday. It's the second live stream of the week, and we have some interesting things going on here today. I think we're both in Euro USD long positions, aren't we, Victor?
Hi there, everyone. I actually, no, I'm not. I don't have any open position, but I already took some when I took some shorts as the market moved down a couple of hours ago. And I covered them right in time before it bounced and came back to the initial level it was. So now I'm still in a waiting position to see which way we're gonna be going today. But it's very interesting because we have news coming in about 29 minutes, and it's high impact news. So from here, the question is, do we continue on this bullish structure we have been forming last couple of sessions, or is this maybe a temporary top? And who knows, we'll be seeing that live in our session today.
Yeah, let's see what happens, guys. Now today I want you guys to like the video. So today I'm gonna remind you guys about liking the video, because honestly I see when I remind you about liking the video, then it just shoots straight up. So it obviously works. So I'm gonna try to say it a couple of times during this this live stream. And the reason why I want you guys to like the video is not only because we're giving up more accounts the more likes we have, but also because it really does help the channel. It activates the YouTube algos. If you like what we're doing here, if you like the content that we're providing, hit that like. It's a small gesture for you, but it helps us immensely. So hit that like, and I'd be very, very grateful. I'm gonna pull up my screen here right away because I do have Euro USD open right now, and this is the trade from, I believe, Monday. Did we enter? Yeah, I think we entered. No, this was last week. We actually entered this one last week, I believe, is when we entered this one. And I'm still in this one. It's looking good. We have the news coming up in about 30 minutes. So that's going to be very interesting. We can look at the actually, we do have the news right here. So let's go to TradingView. We're going to look at the economic news calendar in TradingView, and you can see that we have, let's see, let's scroll down. 14:30, we have the PPI coming out of the United States of America. And then we have, what does it say here? That was at 11, right? Yeah, we have the economic sentiment index. We had that at 11 this morning. So what's coming up here is the important thing is obviously the PPI here, and it's coming out in exactly 26 minutes and 10 seconds. So let's see what we get here. I'm currently in, like I said, this long on Euro USD. I'm also in a long on Euro AUD. And let me break this down so you can see that we have somewhat of a, now this is on a weekly, right? So actually I think it's better to watch the daily. So what I'm seeing here is I'm basically looking at this level as a major support area. So all I know is, I want to go long, or at least I want to look for an opportunity to go long if price hits support. And then where am I taking that trade? Well, I'm taking it up to the next major level above. And on the daily here, I think it's basically what I'm looking at is a move from this general area up to this area right here. And you can go in, can zoom in, and we can look at the local price structure. And what's happened here is exactly what I wanted to happen. You see, you can have sort of a downtrend here, and then you have a higher low. Let's make that a little bit smaller. So you can see you have that higher low right there. And what I'm seeing is, like, the price structure that I'm seeing is you have a level here, okay? And what happens is you come down, you hit that support, and then you have like a low time frame break and retest of this area, almost like a it's the same reasoning and the same idea as it's a double bottom or a W structure, but the left or the right leg of that W is much further up. But it's basically the same. It means the same thing, right? Where you can look at it, if you zoom in like this, you can kind of see what I mean by drawing the lines like this. And that there you have it. The right leg of that potential W structure is much higher than the left ones. It's not, technically not a W or a double bottom, but it basically means the same thing to me. So I think this is, to me now, if we can break above this level on the daily, then I think it's fairly likely that we're going to get that move to the upside. 4-hour structure not looking there's not much for me to look at on the 4-hour structure here, but it's very clear on the daily. And of course, that low is going to be my invalidation of this idea, because then we might have something like this. So that's where I'm currently in right now on Euro AUD. So it'd be interesting to see how this reacts to the upcoming news. And again, I also have the USD CHF trade is still open. This is basically what I'm doing here. It feels like I'm just waiting for stop loss to get hit, but there's also, of course, the chance that price moves lower, right? So I don't want to close this trade. I think at this point it's likely the stop loss is going to get hit, but with the news coming up, you know what? I'm just going to hold it because it might just go lower. It is what it is. It's just a half an hour risk on that one, so I don't really care much.
Not only that, but I think if you are already in a trade and your stop loss is adequate to withstand the news, right? This is dollar Swiss, so it could move. But if you're already in the trade and you know that the catalyst coming up, I mean the news could be a catalyst. If that happens, in terms of risk reward, it makes sense to hold, even though you may stop out more often than not. Those times, the 1 or 2 times out of the 5 that you do get the direction right, it's going to run, and that's what you want to catch. And the cost of catching that opportunity is getting stopped out, perhaps this one, maybe the next one. But one of these days you will catch it, and you'll be grateful for sticking to it, because it's going to be a big move.
Exactly. And you want to you want to give the trade the opportunity that it deserves to become a big winner, right? We every trade has equal rights to become a big winner. Basically, that's my motto. Yeah. Okay. So we have Euro USD. We have Euro AUD, and we get USD CHF. Let's go through this list quickly. So what I'm going to do is I'm going to wait for the news. So we'll go through the markets here. We'll take a look at the pairs, and then we'll look at the reactions of the news. I'm going to pull up different charts here. We're going to look at the news live, and then right after that, I'm going to give you guys a quick presentation on the Fibonacci retracement tool. So this is my second list right here. This is the only list I care about. This week I've done my weekly trade journal, not my trade journal. I've done my weekly market scan, and these are the pairs that I think looks best to me. Remember yesterday how I said CAD CHF, it looks like it's going to move higher, but I'm not sure. I'm not sure where that entry is going to be, but we did get that move higher. And honestly, I think for me, the best scenario, the best way to enter this trade for me would have just been to look at that 0.702, put the entry orders around that one, stop loss below that low, and then just target the TP. I mean, it's a 3-hour trade, and it's on the daily as a range trade. Just you're playing ping pong between range low and range high. It kind of makes sense. So I feel like I should have entered this trade. I should have entered this trade. So to me, this is not really a missed opportunity because it wasn't perfect, but in hindsight, a missed opportunity, which, hindsight trading is not really what we're supposed to be doing. But we have to look at every opportunity that we either take or miss. We have to look at it from a unbiased perspective and ask ourselves, could I have done anything differently here? But also remember, what was the reasoning for not taking that trade? And it was a valid reason, but looking at price action right now, I should have taken the trade. So I don't know. It's worth thinking about these things.
Of course. But did it satisfy all your criteria to taking the trade? Is it a valid signal for you according to your trade plan?
Yeah, well, when you say that it take all the criteria, so it depends. I mean, I have two trade setups or two trade system that I'm trading. While with the first system, the all set method, that's very clear on what needs to happen for that to be a trade. That was not this. I was not using that type of system here for this trade idea here. Basically, what I'm doing here is just very discretionary. And when I trade like that, when I'm very discretionary, it has more to do with intuition than specific boxes that needs to be checked. It's more about do I like do I like price action? It's difficult to
Mm-hmm.
describe to someone new in trading, but you know what I mean. You know, you get an you
Mm-hmm.
look
I
at
know for
price
sure.
action, and
And
price action tells
yeah.
you, you know. So it's very discretionary. So did it tick all the boxes? No, it didn't, because on the 4 hour, I like the feeling I got on the 4 hour is just confusion. You know, it's just not what I wanted to see. This is not really what I wanted to see on the 4 hour. It's um price action is too chaotic here. Or chaotic, whatever that word
Chaotic.
is. Chaotic,
Yeah.
chaotic,
Mm.
chaotic. Yeah, okay. I got to work on that. So yeah, it on the 4 hour it didn't really take that box. So you know, with that in mind, it's probably a good decision not to take the trade. You know.
Mm-hmm. Yeah, I understand that. Well, that's the 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 benefit of trading discretionary is that you have a lot of freedom and you can have a lot of opportunities because you're not bound by rules and check boxes that need to be checked or ticked. But at the same that same benefit also has a lot of disadvantages. The thing is, it's if you don't have set rules that needs to be satisfied, it's difficult to you know build consistent data on it, because if it changes all the time, then there are so many variables that it's difficult to measure the actual edge that you're employing in the market if the thing always changes and you keep on changing. But I have that issue too. I have my mechanical system, and I know that has different rules, that if I the first rule isn't satisfied, I have nothing to do going to the second step. Only if I have that cascade of list of things that need to be satisfied, even only if they are satisfied, I can go to the second step and third, etc., until I get a signal. And that's good. That's very good. I like that mechanical. But the thing is, and it's very good for your consistency, for your back testing, and for your result, for your long-term equity curve consistency, everything like that. But there are still opportunities out there that are not caught by my mechanical system. And I too use entries discretionary from time to time, and I know that I have edge because I see my results. But it's
Mm.
not part of a strict rule, just like yourself. But the thing is, you have to, at least for me, I need to have an idea that I do have data on it. Let's say an outside bar. I need to have, like, okay, I know that this outside bar, if it reacts, it should go this far. And when I need to know, when am I wrong? And that's a very vague and general idea. But once I have that, then I can frame my setup discretionary based on that outside bar. For example, let's say on the 4 hour, on the daily, whatever, what have you not. So I still need to have some data on it, and that's when I deviate from completely mechanical. But if it were me, I would like to stay mechanical,
Yeah.
because it's much more easier. I know exactly when I'm supposed to enter, exactly where I'm supposed to exit. I can set and forget because my data tells me that this is the place I need to enter and walk away. Discretionary is completely different because you don't have that specific data on it, since it's discretionary. But so I use both of them because in the end we're here to make money, and I know I can do it both ways. So why not do it both ways?
Yeah. I think you mentioned two things that I think is, important. First of all, you said, you want to have a systematic approach, and you kind of need to have something to fall back on, to rely on. You said an outside bar where you have, you know something about it, you have some statistics, there's something you can, there's some, something you can touch, if you will, like some statistics that you can rely on,
Exactly.
instead of just being completely discretionary. And I think, for me, I've created the system that I've traded for many years. I've created that, like, from lots of different, looking at YouTube and all of that. But that's not the only system I've created. I have many failed ones as well. And I think from that experience of creating trading systems, I know I've got a lot of experience with technical analysis and different technical analysis tools. So I'm kind of like building up an intuitive knowledge base, and I'm trading based on that. So even if I don't have like a specific rule that I'm following, I know exactly what I'm looking for. And as soon as I see it, I know that that's it. That's what I'm looking for. And so yeah, it's interesting. I
Yeah.
mean, you have to
I,
have
I,
a lot of years of trading experience under your belt to be able to trade discretionary and from an intuitive side of things. Before we move on that subject, I just want to. There's one comment from this guy from Brighton. It's not this comment, but yeah, I definitely agree that risk management is key. Absolutely. You had another comment up here where you said, I feel like you're breaking your own rules. And this is a very interesting comment. And I love the fact that we have audience and viewers being very engaged, and they've been watching us for a while and following us for a while, and maybe they know some of our rules of the way we're trading. And I've seen this a lot. I'm trading in a certain way, and then I start deviating from my own rules. I have people that's following me saying like, yeah, you're not trading the same today as you were doing yesterday. So if you could expand on this, that would be
sure.
absolutely amazing. Not you, but I mean
Oh,
Brighton. If you could
but
expand
I
on,
sure, I can
yeah.
I can already, without knowing exactly what he means. The thing is, you got to know how to do things correctly, the correct way. And in that mindset, there's no room for changing things. You need to do them the right way. You got to know the right way. But with the years, you know that, your system, your trade system doesn't catch all the opportunities. And that's the art part of trading, to know when to deviate from that very structured trade plan you have. Right, I could just stay in my trade plan and trade mechanically, and I love doing it because it's safe, it's comfortable. But I know from experience that if I can, I need to know also how far do I deviate. Like, if I start doing things completely different, I know that that's not going to work. But I can, if I by with the experience and to intuition comes into play a little bit, you can move away and still capture other movement, other opportunities, while knowing that that is perhaps that is not the fixed mechanical trade system you always use. And I don't think but you can only do that when you know what is the correct way of doing it or the fixed way of doing it, and when you are, making exceptions because there's edge in there. Right, so when you are at school, you learn like a specific way of doing things, and that is when you are, teaching and showing your actual trade plan, which has strict rules. And if it doesn't satisfy it, you're not trading it, etc., etc. And that's how you should start with it. But with the years, you can allow yourself some room, to do extra things that are perhaps not exactly as your trade system. But that is something you shouldn't be doing at the beginning. You should stick to the plan and not make those exceptions, because otherwise you won't have consistency. But the discretionary part, it has edge, but it's I think, at least to me, it is a bit more difficult to, encapsulate it within a certain fixed number of rules, which is what I do with my mechanical system. But I still know that the concept is still valid. It is profitable. And, but it's just, perhaps I haven't put it in rules yet, but I know there is edge there. So, it's a balance between those two. But and if you only judge the discretionary by the trade plan, you already have the mechanical trade plan, you'll say, but this is not a signal. Why are you entering? Well, it's the thing is, I'm not using my trade plan to do that. I'm using my discretion to when do I deviate from my fixed trade plan. And I think if you know where you are and what you're doing, then and that only comes with hours and hours screen time and blowing accounts and failing. You know what not to do, but also what you are allowed to do. When are you allowed to have some exceptions, and how far can those exceptions be? How often can they be? Because everything has a little balance. If you deviate too much, you're going away from the edge. If you do it too often, you're going to be bringing too much fluctuation in your equity curve, and so on. But I can measure it, that the discretion, when I deviate, when I have those exceptions, that they're doing good to my equity curve. And at the end, that is the data. That's the market, if you will, telling me that what I'm doing, confirming me that it is the right way, because I am profitable and consistently so. So, but it's not easy to do from the beginning. From the beginning, it's much better to learn a mechanical system inside out, become a master at that mechanical system, and only try discretionary a little bit after you have plenty of experience doing the first one. Otherwise, just stick to the mechanical, which is my best advice to everyone.
Yeah, okay, so let's see. We got news coming up in how long? We got about 8 minutes. Right, okay, let's see. About 8 minutes. Oh, I need to sit down for this. I need to sit down. Dude, I'm drinking the best coffee right now, like Peruvian coffee. Ooh, I love it. Like lightly roasted. Do we have any coffee lovers in here? Please let yourselves be heard.
Apparently, I'm an AI according to the chats.
Yes.
I'm in a loop.
Yes, we're
I like that.
currently upgrading.
I'm currently upgrading
upgrading our AI
my
bot
firmware.
here. How
like
will
that.
the winner? How will the winner be chosen? The winner will be chosen randomly based on. You know what? It's based on Gleam loyalty points. So I think the more you watch the live streams, the higher chance of winning an account. Honestly, I think it's Alex that has the best idea of how that works. 6 coffees a day. I like that. Ooh, look at that. Coffee. They all like coffee. Nice. So I am actually
doesn't love
tasting my
coffee? I
own
mean,
this is the first. You know what? Colombian coffee. I like Ethiopian coffee. Like Ethiopian coffee, lightly roasted. Very good. Very good. I'm currently tasting
nice.
my own roasted coffee, which is really nice. I've gotten really good settings on the roaster, which is nice.
How long do they roast
Very
for?
cheap. A roast for what is it? Like total of about 12 minutes or something like that.
Okay, not too long. Okay.
No, not too long.
All right.
It's like
Nice.
first time I did it, everything is caught on fire. I did it inside. It took a long time before getting that smell out of the house. I like coffee, but my fiance doesn't like the smell of it, which is unfortunate because my whole house smells coffee. Henry, you don't drink coffee or tea. I'm very disappointed in you, if I'm going to be honest. Like I definitely thought you were a coffee drinker. Yeah, Jamaican coffee is good. I think it's a blue something like that. That is good stuff. Good stuff. Okay. So we have news coming out. Yeah, Victor, let's talk about your USD.
Someone asked me about my opinions on euro dollar, and this is my opinion. If we go to the daily, what do we see? We see a market in 5 minutes. We have high impact news, so keep that in mind. We have I'll close that for a minute. We have, what do I always say? I mean, the market tells us what it wants to do. Doesn't mean it always does that what it is telling us, but it does tell us what it wants to do. And what do we see? We see bullish structures being formed, right? That's a bullish order block. And then yesterday when we closed, we formed another one. It didn't touch the first one, but what do I see? I see bullish structures being formed. So to me, the bias is to the upside. If you go to the 4-hour, you can see within those order blocks, price moves out. Actually, let's go back to the hourly, to the daily, and see that. What do we have after the formation of an order block? Not always, but a lot of times after the market forms the bar. This is the first one. There you go. That's the first move. That's the bearish bar, and then engulfs, right, forming that order block. And then after that close, usually it comes back to that order block that it forms, that it just formed. And that's the wick that we see down here after it continues. And that's basically, in very simple terms, that's the basic idea I trade of. Very, very, very simple, not too complex. So, and that's what we see. So if you see the H4, we have an order block here. We haven't mitigated yet, haven't come back to it, but still we did form it, and we are now in the process of forming another one, right? We'll have to see if there's no order block here because the news is coming out in 3 minutes, and we'll see. This can change everything. News can change everything, but the structure as it is being formed is my bias is to the upside. And if you go even to the lower time frames, you can see we are now coming back to that 1 hour supply area, right? That's not going to be a huge factor considering the news is up in 2 minutes and 40 some seconds. But that could be something. I would expect price to perhaps interact with this order block, right, within the news or right after the news, and perhaps come back to this one. I don't know yet. Interact one of these two as it is going up, because in the end I think that that possibility is greater. But of course, with news you never know in advance, and we shouldn't bat or have any bias on the news. The news can change everything completely and start a new order flow. But these are my ideas if I'm going to be trading today. Maybe something that comes back into this order block and move up, right? Or it might just shoot up and not come back to anything, and then in that case I might not get an entry. But that's one idea that I'm entertaining today. That's on EU.
Yeah, I'm looking at price action here, and obviously I got my TP above the local, but basically this level that we're testing right now. So I'm hoping that we're gonna get that push to the upside, and that's gonna hit my TP. But I mean, we're trading at resistance. I would say that we keep on testing resistance right here, and most of the time, as I see it, when price keeps hitting a resistance, and then you have news coming up, well, a resistance usually acts as resistance. But if you look at the bigger picture, I think we are fairly. I think we are fairly bullish. I like the local, the local structures that we have printed here, and the I mean, even the local daily trend is bullish. We've reclaimed good levels. I think the 4-hour structure is very bullish here. So, I mean, of course, anything can happen here, but obviously for me, I'm really excited about a potential breakout here. That would be a very good for me. So we have actually we have 3 things that I want us to cover. Can we? So what we're gonna do is I'm just gonna we have news in about 30. So we got news in about 30 seconds. So I'm just gonna pull up my screen here. We're gonna look at the 1 minute. I'm gonna remove that drawing. Where's that? Not that one. Like that, and then we have. Okay, so my TP is up here. We're gonna look at the 5 minute. So let's see how price what price is gonna do. It's so news in 10 seconds. Let's see.
5 seconds. Yep.
Let's see what we get. Push it to the upside is what I'm thinking. That's what I want to see. A big, insane move to the upside. Where's... Oh, god damn it. Oh, sorry, I'm not supposed to be swearing, but we don't have news every day, so I guess that's okay. That's not a big move to the upside. That's not what I meant. I'm thinking that the market maker is going to miss this live stream today. Whatever's going on over in America, you're obviously not watching the 5ers live stream today. But this is no problem. No problem. I feel like the person sitting in a, that meme where you have the dog sitting at a table and it's burning all around him, and it's like, this is fine. That's me, because this is fine. It's no problem. He's testing support. No worries. I'm a little bit afraid of looking at my other orders. Let's look at USD CHF. Yeah, that one's gone. That stopped me out. Euro AD. Well, Euro AD is actually moving in the right direction here. This is
Nice.
this is looking good though. This is definitely the type of move that I want to see. What about Euro USD though? Can we move higher? Yeah, I think definitely we're gonna move higher. Yeah, so this wick right there is getting bought up quite nicely. Looking very, very good. It doesn't seem like we have... I mean, look, if we're just looking at the lower time frames here, we can definitely see that this is getting bought up, right? We have the 5-minute candle closing about 3 minutes, and it's it's definitely getting bought up quite aggressively right here. So let's see what we get.
I don't I don't want to say I'm right or anything. And it's not. I'm not trying to say that. But
But you
if
are
I
right.
see, I'm that's not my intention. But I'm just reading price action. And what does price do after the news? I said it's either gonna because I think the structure is to go to the upside, but we still have to wait for the actual effect of the news. But I would expect that price would be coming back to this order block or this one. And what does the wick does? It doesn't react with the first one, but the second one. And now the question is, will it move from here all the way? Will it continue its way up? Right, so it's not the first trajectory, but the second one that it seems to be going. But we'll see. I don't mean to say it's not about being right, but it's about those are the structures in the market, and it's going to use either one of them if it is going to go up, which we still don't know. It may still come down. If it closes bearish in like 15 minutes, 30 minutes, probably that's not my whole setup scenario will not come to fruition, and it might just continue down. Right, you need to be flexible with that kind of with the bias. But if it leaves this wick like this, I think there is a good chance for it to continue its way up, perhaps come back, start going up. This, who knows, right? These are on the other time frame, so you can't see them. Actually, let me take that away. We'll have to see if it comes back and stays up. That's the thing now. Does it stay up, or is this just a retrace to this area as it continues to go down? We don't know that yet.
All right, so I think it's time to. We have. You know what? I'm just gonna go through. I'm gonna go through my list here to see if this move created any possible opportunities here. Yeah. So on on EuroCAD. I was looking at this type of structure, but it's basically what we're seeing now is, I guess we're seeing like this type of move. We have this, not perfect, but if we can break down here and maybe do something like that, I'm definitely looking at a potential position on EuroCAD. So I'm going to place an alert right below that one. Let's see what we have. Anything else? Yeah, GU, I'm still waiting for that break and retest of this area right here. I'm still waiting for that to develop. I think right now everything is moving kind of like it did prior to the news. I think this is not really going to be any major I don't think it's going to change the trend at all. I think Euro USD is going to continue higher. I think we're going to see a continuation of this local trend. I'm not really seeing anything anything else. We got Fed Chair Powell speaking in about 1.5 hours. That might, I mean, that he might say something that moves the market, but I think right now we're seeing. So the numbers, the PPI numbers were actually higher than expected, which I'm not going to go into what that means or anything, but I think yeah, we're still in a risk on scenario. Still think Euro USD is going to move higher. All right, guys, what I'm going to do now is I'm just going to move quickly into doing a quick presentation here on the Fibonacci tool. So make sure that you like the video. If you have any questions on the Fibonacci tool, now is the time to ask all of that while we go through this. Let me prepare everything. I'm sorry to hear about your grandma, Harash. I think, sorry, I'm butchering that name, but sorry to hear about your grandma. Hope she gets better. And yeah, I mean, probably better.
Yeah, we all do. We send her our best wishes.
And you should definitely spend time with her instead of watching the live stream. You know, family first, always.
Yep. In the end, our goal is to elevate our quality of life, right? And
Exactly.
family is one of those things that contributes to our quality of life. So it's
Yeah.
a no-brainer. Let's not lose ourselves in doing other stuffs. Yeah.
All right, you guys ready? The magical Fibonacci retracement tool. Da-na-na. Unlocking the power of Fibonacci in trading. That was the best possible intro ever, I think. Okay, so the Fibonacci retracement tool. First of all, who is the man behind the numbers? Okay, so Fibonacci, you guys probably know about this guy. Victor is gone. He's probably hinting something. All right, so the man behind the numbers. Leonardo Fibonacci was an Italian mathematician of the 13th century, known for introducing the Fibonacci sequence to Western mathematics. And this is it's his groundbreaking work that has laid the foundation for what we now today know as the Fibonacci retracement tool in trading. And the Fibonacci sequence is a series of numbers where each number is the sum of the two previous ones, starting from 0 and 1. So the sequence begins with you have 1, so you have 0, 1, 1, and then you combine that 1 and 1, and that creates 2, and then you have 2 and 3 becomes 5, and then 5 and 8 becomes 13, and it continues like that indefinitely. That's the basic of the Fibonacci sequence. So the Fibonacci numbers are not only something that we're using in trading. Okay, so it appears to be almost a universal pattern that you can find throughout nature and basically all of our universe. So you can look at, you know, from the patterns, the spiral patterns of a seashell to the arrangement of seeds in a sunflower. The Fibonacci numbers can be found almost all over nature. Now, this sequence shows that there's a fundamental connection between mathematics and nature. And it basically shows us that the Fibonacci patterns can govern the organization and the growth of living organisms as well as cosmic structures. So it might be a small tool that we're using in trading, but on the bigger picture, the Fibonacci sequence and its connection to nature is actually something really amazing. And if you're interested in this, you should definitely do some Googling. And it's really cool how the same things that can be found all over nature can also be found in basically all financial markets. Let's first take a look at the Fibonacci sequence in trading. So traders will utilize the Fibonacci sequence in trading primarily through the Fibonacci Retracement tool, which helps traders identify potential support and resistance. And that's basically what it is. It's a tool that adds horizontal levels, and you're trying to find either confluence or predict where price might run into resistance or support. Some of the key Fibonacci levels are the 23.6%, 38.2%, 50%, 61.8, and 78.6. And you can see all of those in the tool right here. So I mentioned in percentage, but you also have the numbers. So, for example, 61.8% becomes 0.618. This is just a personal preference. You want to watch? Do you want to see the numbers in percentage or in values? I choose to look at the Fibonacci tools and its numbers in values instead of percentages, but it doesn't matter. It's exact same levels. This is a very, very simple but powerful technical analysis tool that I highly recommend you guys at least try to use in your trading. I'm not saying that you have to. I'm not saying that you will become profitable if you use it, but it's a really powerful tool in trading. So how do we find the Fibonacci Retracement tool? Well, the Fibonacci Retracement tool can be found inside TradingView in the Fibonacci menu, which is the third option from the top. So you can see right here, 1, 2, 3. It has a Fibonacci menu, and here you have the Fibonacci Retracement. You also have a lot of other very interesting tools based on the Fibonacci sequence. So the Fibonacci Retracement tool is just one way of looking at the Fibonacci sequence on a chart. There's a lot of different tools out there, and I definitely recommend you check them out. You can also add the Fibonacci Retracement tool by just holding Alt, pressing AF when you're in your TradingView chart. Okay, so default settings of the Fibonacci Retracement tool. When you first add the tool to your chart, it's just going to be lots of weird colors and values and numbers, and you probably have no idea what all of this means. So to use the Fibonacci Retracement tool in your trading, you want to make sure that you have the right settings for you. So in the image right here, you will see the default settings with, like I said, lots of levels and colors and values and everything. So in this presentation, I want to show you the settings I have and how I use it in my personal trading to give you ideas on how to apply it to your own trading. And these are the settings that I have. So by changing the settings to these, you will be adding the, this is basically the most commonly used levels. I've also added the 0.702. I do believe that 0.786 is a normal level, a commonly used level, but not the 0.702. I've added that one as well. And the area between the 0.618 and the 0.786, as you can see in blue and green here, that's the reload zone, or the RLZ. We're going to talk about that later, and you will hear me talk about this quite a lot in these live webinars as well. It's not a concept that I come up with, but it's a name that I'm using, and it's the area of the Fib tool that I use most. But so you can pause if you're watching the replay. You can just pause here, or live stream. You can just pause here and then add these. So at the very low, you see I've put in levels here, and what that means is I can change this to either values or percentage if I want to show values or percentages. You can also see that I have these fibs, and then I put a minus sign before them, and that creates Fibonacci extensions. I'm going to show you more what that means a bit later, but these are the settings that I'm using. Now, how are we supposed to be adding the Fibonacci Retracement tool to our chart? So what we're going to be focusing on is swing points as anchor points. And what are anchor points? Anchor points is where if you activate the tool in TradingView, you will see there's nothing on the chart until you press once and drag it up and press again. It's going to add it to the chart, and you want to use the in a bullish market, you want to use the fibs to find support. All right. So let's say you have a bullish market with higher highs and higher lows. You then put the fib anchor low, you drag it up to the fib anchor high to create bullish fibs, which is then going to be used as support. And in a downward trending market, you're looking at a bearish fib, and you're going to be starting at the bottom to you're going to start at the top of that move to the low of that move. And it's important to always draw the fib forward in time. So always in a bullish market from the low to the high, and then in a bearish market from the high to the low. So imagine that you're drawing the fib in the direction of the trend. Now, there's lots of people use the very extreme, and they always use the very extreme, which means in this case, that's going to be that wick up to that wick. Sometimes I like to use wicks and candle bodies, depending on what makes sense according to price action. You can see right here that when adding that low of that wick to that high of that wick, then the 50% fib here, the 0.5, comes in perfect confluence with these candle closes. That tells me that the fib is correctly drawn. I use different ways of looking at, determining which highs and lows I should be using is for a lot of people, it's you have to choose the ones which kind of make sense to your trading system. But a general rule of thumb is use the very low and the very high. But then imagine if you have a wick that, like a news wick, that just goes crazy and just closes up here, then you can ignore that wick and use the candle closes instead, if the fibs that's created make sense according to price action. And then we have fib confluences. So this is one way of using the Fibonacci tool. So first of all, what you want to be doing is you want to be looking at, or at least this is the way I'm using it, right? You can see here you have a blue area. This blue area is a horizontal support level. And you can see that horizontal support level is confluent with that 50% fib. So I want to focus on the first fib, which is these numbers right here, drawn from that low to this high. And then I added a horizontal level right here. And you see that that horizontal level is in perfect confluent with the 50% fib. And this is what I'm doing. I'm adding the fib tool, and I'm looking for confluences. In my personal trading, I want to find all horizontal support. I want that to be on the 50 or somewhere around the 0.618. But you obviously have to play around with this. But the fib tool is I'd like to call it a confluence hunter. You look for the fib levels that are in confluent with horizontal support and resistance levels, and most likely those are the fib levels that will be most effective. And if you have, let's say, 3 different horizontal support levels, but only one of them is confluent with a major fib level, then that's the one I'm going to choose. And then you have multiple fibs and fibs within fibs. Okay, so this red circle is the anchor low of fib number 1. And then you see the green circle is the anchor low of fib number 2, which is the one to the right. But like as you can see here, you have a good fib confluence between the 50% fib of fib number 1 and the 0.618 of fib number 2. So I'm gonna have a question here, so I'm gonna bring that up. I do read the comments while going through this, so if I'm I'm a bit slow, that's why. We have a question here. This fib is wrong. You place 0 at support and the movement cannot have noise like that. In this case, you hope to... Yeah, okay, so what you're saying here is like your okay, so you place 0 on support. Okay, yeah, I don't really understand that question. If you could be a little bit more... if you can rephrase that question, I don't really understand exactly what you mean, but I do see that you can look at that low, for example. I mean, this low and that high, that is the whole movement. This is a correctly drawn fib. The second fib is not the way I would have drawn it. The reason why I'm adding this fib is to show you the fib confluence between the 50% fib and the 0.618. The second fib anchor low is not really 100% correct. I would probably be better off using that one, but if I use that one, there's no fib confluence.
I think the viewer is meaning that according to him, the 0 should be below in a bullish market and the 100% above. But I agree with you, Jonathan. That's not how I do it neither. I do it like you do because the fib is a retracement tool. So when it goes all the way back to the first point, that's 100% retracement. So the way you do it, I think, is the correct one.
Again, that in technical analysis, there's no right or wrong way. There's no correct way of doing things, but there are fundamental ideas, when you look at how the Fibonacci tool was created, who created it, and the way they used it, that's what we're talking about here. And if you have personal preferences of using it in another way, then that's good. But
sure,
there's hundreds of different ways. No one's right, but there's actually a default way of using the Fibonacci tool, and that's so I agree with you. So again, we have the idea of having a fractal nature of price action. Okay, so the fractal nature of price action means that one move on a daily is one candle on a daily can be multiple trends and ranges on the 1 minute. So with fibs within fibs, you want to look at one move, add the fib to that move, zoom in, and then add fibs to that smaller move within the bigger fib. And we're going to talk about that as well. I'm going to show you some examples if I have time to do so. But it's a confluence hunter. Okay, so the 50% level, 0.5 and the 0.618. So two of the most commonly used Fibonacci levels are the 50% and the 0.618. So if you're going to start experimenting with the Fibonacci tool, which I highly recommend you should be doing because I think it's a very, very valuable tool if you can get it to work, you will notice that pretty much all markets will a lot of times create violent reactions around these levels. So look at any markets, okay? Any markets, look at the 4-hour or the daily, add the Fibonacci tool, and focus on the 50% and the 0.618. I promise you, you're going to see strong reactions on these levels a lot of times. There is there's going to be very possibly an edge to be created around price reactions to these two levels. They're very powerful and they work. I haven't found one market where it does not work. So definitely focus on those two levels. We didn't have the reload zone, or the magical reload zone, as I like to call it, the RL7s. The area that I use mostly with the when trading the fib levels is the area between the 0.618 and the 0.786, and you're going to see a lot of those. You're going to see me talk a lot about that, and I'm seeing Euro USD is breaking out as well. Very nice. I'm going to continue to talk because I swear as soon as I switch to the Euro USD chart, it's going to come down. Let's see. So yeah, when I say RL said that this is the area that I'm referring to, and when you're adding this to the chart, this would be like your next step. Look at the 15 and the 0.618, and then when you add the reload zone or whatever you want to call it, you will see that a lot of markets that move have a very deep retrace, usually comes down to that area, and it works beautifully on the higher time frames. One example is Bitcoin. You can go look at the weekly on Bitcoin, and it's just most of the perfect bottoms in the bear market is inside the reload zone or around the 0.618. Another way of using the Fib tool is adding extensions, and Fibonacci extensions is a really good way of finding good take profit levels. So you look at the ordinary Fib levels as support in an uptrend. You want to be buying when price hits a horizontal support level that is also confluent with a strong Fib level. And if you're not going to be using the FTA, which is this area right here, the FTA is always going to be the zero in that move, right? Well, most of the time. And that's going to be the highest point of the move that you're buying. It's going to be the zero. If you want to extend your targets above the zero, then these levels right here is very good. Basically, what you're doing is you're taking your Fib settings and you're just adding a minus sign before the number, and that creates a Fibonacci extension. This is very, very useful in markets that are in all-time highs. Now, of course, we're not going to have a lot of Forex pairs being in all-time highs, but imagine that you're trading altcoin or Bitcoin, or you're in the equity markets, something breaks out into all-time highs. Imagine that the zero is the all-time high, then these levels becomes really good levels to look at profit targets. Some of the profit targets that I use is the minus 0.236, the minus 50, and the minus 0.618. As a tip when looking for Fibonacci take profit levels. And again, when you're in the market where you're not in all-time highs, you want to look for the Fib extensions that are in confluent with a horizontal level. You know what? After this webinar, we're going to go through a couple of the setups that I have on, see if we can find confluence with the Fibs, just like I described here. So now that we know, the settings of the settings I use for the Fib tool, and just to give you a general idea of how to add the Fib tool, I want to show you a very interesting pattern that I use in my trading when it comes to the Fib level. So again, I like using the reload zone in my trading, and that's going to be this area right here between the 0.618 and the 0.786. What I love is when you have a double bottom inside the reload zone. It's not going to happen very often, but when it does happen, it's so basically what you have is when price hits the reload zone in an uptrend, it means that you have a quite deep retrace. So you're hitting an area where it's typically a strong support area based on the Fibonacci sequence. And then if you start forming a double bottom or a reversal pattern, could be whatever, could be a Quasimodo like Victor is trading, or a head and shoulders, inverse head and shoulders, whatever, just a type of pattern that shows that the market is ready to reverse. When that happens inside the reload zone, it adds, at least from my testing, a lot of probability that reversal pattern is going to be strong. One way that I love to trade this is the perfect pattern is when you have both the bottoms on the 0.786 and then the neckline is the 0.618, and you have a breakout, hits the 50 as resistance, then comes back down to retest the 0.618. Those are, in my opinion, the best way of trading this. Usually what I do is I place entry orders on the 0.618, stop loss below the lows, and TP around the 0% Fib, or even higher if you want to push it. And then you're using Fibonacci extensions as your TP. Now, imagine that you're trading this pattern, but you're also looking for Fibs within Fibs. And that might look like something like this. Imagine that you have a market that comes down into the reload zone. It forms a double bottom within the reload zone. And this major breakout right here, you're seeing this and you're thinking, you know what? I missed a move. Okay, I missed a move. But when you add a Fib from that low to this high, you see that the 0.618 of the smaller move is in confluence with the 0.618 of the bigger move, and that's where you have Fibonacci confluence, or you have confluence between fibs within fibs. Basically what that is, it's a fib drawn on a smaller move within a bigger move. And this, in my opinion, is one of the best ways of using the Fibonacci tool, because you're implementing the fractal nature of price action and you're applying a multi-time frame analysis in a very effective way. So definitely worth checking out and trying this out. Okay, so finally, I have two other ways of using the Fibonacci tool, which is more of a nice way of trading, just making your trading life a bit easier. If you create a template in TradingView, you can create different templates, and you're adding the 0, the 0.5, and the 1, you can mark out ranges. So if you have a range like this and you put the fib from that low to that high, you're going to create a very nice looking range with range highs, range lows, and then you have the range EQ. The 50% is the middle line between the 1 and the 0. You know that's the range EQ. So I think you would be surprised how often the W within the reload zone actually comes along. If you try this out, backtest it on your own, it actually happens quite often. Now the problem is you might not get the retest of the neckline, and the neckline might not be perfect with the 0.618, but you have to be a bit, you have to have an open mind here. It's not going to be perfect, okay? But a reversal pattern inside the reload zone is it's very strong. Now it doesn't have to come along often, but the win rate is actually quite high. And then also you have another way of using the fib tool is if you're adding the 1, the 0.775, the 0.5, the 0.25, and the 0, that means you have five lines, right? And you can also add so that you see the prices. You have the value of the fib, and you can also add the prices. Now imagine that you're looking at a market and you want to be dollar cost averaging into this, well, not dollar cost averaging, but you want to be averaging into this market, and you want to do it evenly within an area. You can use this Fibonacci template tool, and you can place 5 orders within let's say a major high time frame support area, place orders evenly within this area, and you'll get the prices up and everything. So that's just a quick way of an extra way of using the fib tool. All right, that's it for this quick little 30 minutes long presentation. Now let's look at the market. Let's look at the actual trading view. Can I use the fib tool in trading view? Yeah. That's in trading view, exactly. See, do we have any? Let me know if you have any questions on the fib tool. I will go into trading view. We'll pull up we will pull up Euro USD, and I will see how what's happening here on Euro USD. Now that is a nice candle right there on the 1 hour. This is nothing but bullish in my opinion. I mean, I would say now that we have, we're done with the news. That 4 hour candle is just absolutely beautiful. I mean, there's nothing bearish about this. I feel fantastic. So Euro AUD, I think it's going to move higher here. Okay, so let's add the fibs here. Okay, now I haven't. Okay, let's add the fibs. Let's play around with the fibs here. So we have some basic ideas on the fib tool. Let's play around with this. My entry is here. Why is that my entry? Okay, why is that my entry?
If I may interrupt, guys, viewers, remember to hit the like button. The more likes we have, the more chance you have of winning an account, a prop firm account, completely free for you to start your trading journey. So hit that like button, and it also helps us. It supports this stream. We will be getting better guests the more likes we have, right? The more you like us, the better we will be able to become. So if you like this section, for example, on Fibonacci, right? If you think this is valuable information for your trading experience and for trading growth, do hit that like button. show us your appreciation, and we will be able to keep on delivering this kind of value. Back to you, Jonathan.
Okay, so what time frames am I using for entries? Usually, I don't go lower than the 1 hour. Usually 4 hours. So I look at the first when I scan, I look at the weekly, the weekly for like levels. I want to find levels that are confluent with the weekly and the daily, and then I go down to 4 hour. And usually the entries are 4 hour or 1 hour. I don't really go lower than the 1 hour. Yeah. So the CPI readings were high. Okay. But price action is not showing me anything else than bullish price action, which is weird.
There's a fat speech in 5 minutes, 4 minutes, and a little less than 5 minutes. So that could make maybe that's what the market is waiting for, the actual push up, because what we've seen is we're coming from a bullish market structure. Before, within the news, it had a spike down, but came back all the way back to the actually on EU it broke out to the upside, but it's still not really pushing like impulsively yet. And perhaps they're waiting for the speech, and as that is out of the way, then the market can make its move. There's something also interesting on dollar index that I will show in after you finish, Jonathan. After you show that how the application of the Fib tool goes.
Yeah. So why did I want to enter here? Well, we can add the Fib tool here from that low to that high, and then if I extend the Fib here, so you see here on. First of all, let's talk about the Fib anchor point. Why am I not putting the Fib here to here? Because these are two different moves. You have one low, one high, a new low and a new high. So these are two moves. But what we can do is we can add two Fibs. One Fib here. Actually, I'm going to change template and look at the Fib, my Fib templates. I have a lot of different templates here. There's a lot of different ways of using the Fib, right? But I'm going to select the one which says RLZ plus 50, which is this one right here. So as you can see on the first move, what level did that hit? Well, obviously, it hit the RLZ. And not only did it hit the RLZ, it hit the mid zone, the middle line of the RLZ absolutely perfectly, the 0.702. And this is why I have the reload zone on my chart. Actually, you know what? Let's go to the 1 minute. Let's see what price did down here on the 1 minute. So if you're trading this on the 1 minute, look at that. Price comes down, mid zone of the reload zone, breaks out, and retests the 0.618. Now, what happens if this is where the magic happens, right? What happens if I fib this move? What level do you guys think that got hit? Well, it's obviously going to be the 50, right? From the low to the high. Look at that, the 50% fib. What do we have here? We have fib confluence between the high time frame 618 and the 50% fib. So what if you put entry orders on the 50, stops below that low, and then you use the higher fib as your target, which is going to be all the way up here. Let's look at that. It's going to be a highly profitable trade. It's going to be a 7R trade. And that's what I mean.
Those
by
are my kind of trades. Using fractal to using fractal on a lower time frame, but actually you're actually trading two setups at the same time, just one within another.
It's amazing, yeah. So yeah, we see right there. We get the move. Yeah, Alex says, yeah. Well, honestly, Alex, I'm telling you, check this out. It's not as complicated as it sounds.
Market is breaking out, by the way, right? 1 minute before the speech.
Yes. Okay. I'm very God. What if it's just gonna reverse straight down? What if I'm just gonna get stopped out here? I would be very calm, relaxed, as a professional trader should be. Very calm and relaxed. No problem at all. I don't care.
Market is going up.
Okay, so again, that was the first hit of the reload zone. That's the first move. What about the second move from that low to that high? Well, what do you know? What level got hit here? Well, what level do you think got hit? The 0.618, the reload zone. Okay. Now, what we can do is we can go into the lower time frames. Again, we look at the 1 minute. Now, I'm thinking there might be a break and retest up to 50, the 50% fib going to the. Let's see. So here you have that's actually, you can look at the 5 minute. That's actually double bottom on the 618, right? Double bottom on the 618. Now, what happens now? Well, you don't have the retest. Well, actually, maybe you do have a retest on the 15 minute because sometimes the retest just comes way later. Now, it's not going to be a retest on this one. Not a good one anyway. But you still have that. Even on the 15 minute, you have a good double bottom here on the 618. So, yeah. Yeah, that's yeah. Well, yeah. I guess. I guess, but
That's a good way to looking at it. Yes,
yeah.
it's where the value is.
Yeah, exactly. Can you change the color of the candles? No way. I'm never gonna do that. I'm sorry. You'll have to change the color settings of your screen. I'm kidding. I'm not. I like my colors too. You'll have to survive. What's going on? It's close.
Someone is asking about gold and fibs on Friday. Maybe you can help this viewer.
Okay.
I'm not sure. He says he put his fib from Friday search up.
Oh yeah, probably gonna be that one. Yeah. Okay. So let's look at that one. This is a good one. Wow, gold is bullish. Holy macaroni! Look at that. That is bullish. Okay, so let's add a fib here. Now, if my eye is correct, that should be the 50. Oh, that's actually the 0.618. Again, that 0.618 level strikes again. It's
very effective.
Every move that I've fibbed.
Yeah, very effective in identifying that turning points in advance, because basically when you're drawing up the fib, nothing has happened. It hasn't started, the whole retracement, and you already have a good idea where to put, where you want to be entering, where's the value. I mean, that's a no-brainer. That's a huge advantage for someone, for us as traders. If you have your specific time or level, not time, level where you want to be entering. And it may also help you with your psychology, because as it's coming down, it gets difficult to not enter, because you want to be you don't want to miss the trade if it turns around before that. So if you have a specific place where you want to enter and you're strict about it, it helps your psychology, because you have something to rely on. Okay, it hasn't reached my level yet, so I'm not going to get in. I'm going to wait like a good trader. I'm going to wait for my level to be hit, and then I'm going to hit the entry button, the trigger.
This is, by the way, a very good comment. Nothing surprises me in the market. I think when you reach that level, welcome to the world of professional trading. Like nothing should surprise you, and you should be looking at, like, would I be happy if there's like a massive bearish candle just takes out my stop loss? Of course not. But would it be surprising? No. I've traded through COVID. I've traded through market crashes. Like I've seen a lot of weird price action that's done stuff that I didn't even think was possible. Seeing a 100 pip move, and then all of a sudden it gets retraced and continues in the other direction, and it's insane. So yeah, I think nothing surprises me, but I still think in probabilities, and I still think that this.
The thing is,
this is not going to break down.
The thing is, you may have, and it's good to have biases, because they're based on either data, on price action, your experience, intuition, whatnot. That's good, but you need to be flexible with those biases. You should not be fixed, stubborn, holding on to those biases, because that is what gets you killed. When you're stubborn and you think, no, you're right because whatever you think. But you have to be flexible and be able to reassess. Okay, I had a bias, but what is the market actually telling me right now? Is it confirming my bias? Because if it's not, you don't want to be going against the market. You have to, be flexible. You keep your bias, perhaps, as long as the market confirms that and tells you that you are right, or that your bias is right. And as soon as it tells you otherwise, throw away that bias, because the market is always right.
Yeah, when we got the Fed speech coming up in 45 minutes. Okay. Well, that's
The market is
definitely
moving
enough time.
very nicely to the upside. It's been hugging that 8 EMA on the 5 minute for euro dollar very, very nicely. I don't know if you have that on your screen. 8 EMA on the 5 minute.
You know what? I just want to show you something pretty cool here. I've developed the indicator. I also had a question on could you tell us about the RSZ indicator. So what's cool about this, and I'm not chilling this. This is available. You can get it for free, so it's not about that. But what I wanted to show you is using the you can create like a system using the fib settings. So when I'm adding the fibs here, you can see that I've actually created a system around different indicators in confluent with the fibs. Okay, so as you can see right here, we see that the indicator automatically adds the this fib, and it adds it using that low and that high as anchor points. And then you can see that price comes down, hits the 0.618, and then forms a bullish engulfing candle. That bullish engulfing candle triggers the long signal with a stop loss below the trigger candle and TP at the FTA. So what I've showed you, my type of trading is actually it's actually simple, and you can systematically trade using the fib tool. So the fib tool is not only for people that are trading discretionary with fibs within fibs and all of that. You can use it in a systematic trading system, and a lot of people actually code algorithms based on Fibonacci levels. So it's quite advanced and quite. It's definitely a tool you should be trying out. We have Alex again. In case like this on EU, why don't you move stop loss to 1 hour profit, for example, and wait? This is the, and you know what? Like, I feel like I'm when it comes to my development as when it comes to my development as a trader, that's my next that's my next level, trade management, because I feel like I want to do this, feel like I want to do this, but a lot of times, and I could definitely feel, I definitely feel like I want to move my stop loss here. That's what I want to do, and it makes sense.
I would say, I would say let the data tell you. Consult your data.
Exactly, and the data tells me. The data tells me that there is a possibility of price moving like this. There's a real possibility of me getting stopped out for 1 hour and then reaching final profit. No, not only is it a possibility, but I have seen it happen a lot of times, and it happens with trades that would have been a 6R or 7R winner, which you cannot afford to give away that type of profits. And that's what I'm struggling with. Like, yes, a lot of my trades will retrace, and I'm gonna give everything back. But the trades that do hit that 6R or even 4 or 5R, like my win rate is around 40%. So a 4R or 5R trade is very, very profitable.
But the thing is, what you're saying is very crucial. I think it's very something every trader will be facing at some point in their career. The thing is, in order for you to hit those high R trades, you need to let the trade breathe. And if you're going to set trailing, and it may be valid because the data tells you so, and if that's so, follow the data. But in a lot of times, what I've seen is, if I try to conserve my open profit, my floating profit, I'm going to cut my profit in the long run, because if I keep doing that, prices sometimes comes back, takes me out at 1R, and my 7R trade is canceled. So in order for you to catch those 7R trades, you need to be willing to have that trade open and fluctuate as the market breathes in, breathes out. So it's a balancing act between, you don't want to be you don't want to give all the profit backs, and I understand that, and you should be considering, one of the things actually what you need to do in your data. We haven't talked about this before, but to measure the maximum favorable excursion, right? The MFA, right? MFE it is. If you do that, the market will tell you how often, how far does it go. And based on the data, and that's what I mean by consulting your data, based on that information, that metric that you will be measuring your signal or your setup, you will be able to say, I know from my data that 40% of the time it goes to, let's say, 7R. And you measure if that is that the right TP that you should have. Or you can say, okay, and 60% or maybe 70% of the time it goes to 1R, and that's everything I need, just 1R, 70%, and I'm happy, right? So the data should allow you should consult the data to help you choose which one you want to be. And even that, you will have some choices to make. Do I want to be in the trade longer? What fits my personality better? Do I want to be in and out? Because 1R may be hit in 20 minutes, 1 hour, while the 7R may take you the whole day or even an overnight. What goes better with you as a trader? And there's no right or answer for everyone, because we're not the same. You are not like me, and I'm not like you. So it's something quite personal.
Yeah, and I think for me, it's staying in trades and holding them open, and seeing this, like I I actually I quite like it. I mean, the fact that I really like the fact that I can enter orders and then walk away and let them be open. They can be open for days. I don't care. Like I'm very disciplined when it comes to being in positions. I love the feeling of having a trade open and being in a position. As soon as I close it, I'm like, ah, I need to enter a new one. So if I can be in a position for a long time, that kind of satisfies my urge to be in a trade. So if I'm in a good position, I'm gonna let that position, then that trade, do its thing, and I'm not gonna get in its way, because I feel like that's what I'm doing. I'm kind of like, who am I to say, you look at the daily on EU, we have just reclaimed the previous range lows. We have like my TP is below the major resistance. Like, who am I to say that? I'm gonna exit here because EU is probably gonna move lower. Like, from a technical point of view, it makes no sense. It makes no sense.
Mm-hmm.
Now, if price is going to come down here, if price is going to come back to my entry, price might come back down here. That's okay, because again, this would be the trend. This would still be the trend. So for me, it's all about getting a good entry and having a wide stop loss to kind of have leave some. I forgot what I was saying. Yeah, give the trades some room for error. Sometimes I'm reading the comments and I
it mixes up with your train of thought.
Yeah.
What I from what you're saying and from what I just said as well, the main, in one sentence, I think the phrase is know thyself, right? It's important to know what goes with you, how you work, because what you just said, when you don't have a trade on, you have that itch to put on a trade. If that is something, instead of blocking you or suppressing that, go with the flow. Do something that satisfies that characteristic of that you have, which is having something on, right? So choose either a TP setting or a time frame or a setup or a strategy. It doesn't matter, but adapt everything to suit you, right? Knowing yourself, know thyself, right? You got to know what kind of trader you are, and that only comes with experience and time. But in the end, you should do that, because it's much easier when everything is set up to accommodate the way we are, because it's much more difficult to change how we are, right? There are things we need to change and improve in our personality, in our habits, but there are other things, that are deeply rooted in the your personality, that they are quite hard to change. So it's
Yeah.
much better to change, the system than to change you. But of course, you need to change the system in a way that you're going to be profitable, right? You don't mean if you're shooting from the hip all the time, or you have a trigger finger, I mean, that's something difficult to have a system around that. So you can't satisfy those bad habits all the time either. Yeah, there's something I just took. I took off two trades I had on EU and GU, and pocketed 5R a few minutes ago, because we were hitting the daily ATR. Doesn't mean anything. It doesn't mean that it's going to reverse from here. But based on my entry, my stop loss, that was a very nice trade. So I took it off, and that was a discretionary trade, by the way. It wasn't something with my mechanical signal. What I can say, I can perhaps show my screen before we continue. Let me see. There we go. That's my screen, and this is the market, right? I drew these lines before this candle came on, before the news. And as I said, the market, probably, if it's going to go up and has some kind of bounce to the downside before it does that, it might use this structure or the second one. And in this case, it used the second one, as you can see here, and it moved right. This movement is illustration, right? So it only took one bar, and it's shooting up. So this looks very, very good. What I want to show was this. If we look at dollar index, right, which is the chart for the dollar against a basket of other currencies, and we go to the 4 hour. And if you guys know me, what I like to see is, let me take that off. What I trade a lot. Sometimes these tools, they are kind of, you click them once and they don't select them right away. But anyways, what do I see here? Right? If I go to the daily, what do I see here? We have the market has been, actually, let's go to the weekly. Let's have a panoramic view of things. If we go to the
Nice. I like it. Weekly. Good stuff.
yeah, if you go to the weekly, what do we see? Actually, we can even go to the month, right? That's even, I like to start from the
Let's go
month.
to yearly.
We have a monthly structure being formed, right? That was a couple of months ago, of course, since this is the monthly. It goes straight down, right? Forms a bullish structure, right? What does it do after it forms that bullish structures? It retests it in two candles as it is moving back. And where does it go, right? If it's leaving one station on the monthly, where does it go? It's going back to the opposite structure in the same time frame, which is the monthly bearish structure. And that's exactly what it has done, right? So that's how I see how the market moves. Okay, so let's go. If we have this, right, market came back to retest this order block. We go to the weekly, as it is coming back, interacting with that monthly order block. What does it do? It forms a outside bar, right, which is an engulfing on steroids. I always say. So this is the there you go. This is the actual. This is on the monthly, so this is on the weekly. So I should leave that order block alone, since that is a daily order block. So let me put in a weekly order block, which is this one. I didn't have it on, but you can see how the outside bar is. So when after it forms that outside bar on the weekly, and that it happens after it interacts with the monthly and it's moving away from it, my expectation is, where is this going, right? If it's leaving, again, the same thing. If it's leaving a weekly order block, right, that it just made from that order block, from that move, what is the next order block in the same time frame, right? That is the weekly. And where is it? That is way below us. We haven't interacted with it yet. So to me, that is still unmitigated. And if I see that, if I use that same same position or same way of looking at the market, and we go to the daily, what does it form? It forms a bearish order block, right? On the second time it this second equal high, you could say. After it forms this order block, this bearish order block, it moves away and comes back, retests it. What does it do after retest? It forms another bearish order block. So the market is telling us in different frequencies, in different language, basically, that it wants to go down, right? The monthly, the weekly, the daily. And what does it do on the 4-hour? What does it do on the 4-hour? Look at this. It forms one order block, which is this, right? This is the outside bar. Only looking at these two bars. Let me get the arrow in. That's this bar. And let me use that shortcut, that bar. Only these two bars, right? You have a bearish outside bar. But what does it do on the third candle? It hasn't closed yet. We still have 1 hour and 29 minutes to go, but it's potentially going to form another outside bar back to back, right? Bearish to a double outside bar, bearish. To me, that is very, very strong signal that the dollar index wants to go lower and will probably be going lower in the next sections on the 4-hourly. So you have the monthly telling you that this could continue to go much lower. The weekly, the daily, and the 4-hourly is screaming that the dollar index could be going much lower. What does that mean for your EU trade or your dollar trade? I mean, the pound trade. It means that, it can go much, much higher because it's inverse correlated, right? Dollar indexes go down. The euro obviously will be going up. EU will be going up and GU will be going up. So you can use that dollar index to form and look, have a bias. Where do I want to be going? I want to be long this market. Of course, it's another subject. Where am I entering? Where is my stop? That's different, but you at least have an idea of what is most likely to happen in the coming hours, coming days, and perhaps even coming weeks. That's what I wanted to say on dollar index, right? Double outside bar, bearish. It's very, very significant. Doesn't happen often, and you bet the likelihood that price will be going lower is very high. But keep in mind,
Yeah.
anything is possible, right? We might have some speech from the Fed chairman, and it may break even this that looks very, very convincing to me. You have to keep that in your mind that it's a probable thing, right? Even if it's highly probable, it's not a certain thing. It's still probabilities, right? So keep that in mind. Don't go bet the farm on it because sooner or later you will be wrong, as you see that what is probable doesn't always happen.
Oh yeah, definitely. I mean, yeah, it's going to be interesting for sure to see what happens here when Fed starts to speak. So the giveaway code, the giveaway link is in the pinned comments. So in the pinned comments on YouTube, you can click the gleam.io link and we'll take you to the YouTube giveaway section. The secret code for today is FIB. Fib. Fib.
Does it matter capital letters or not?
I don't know. I don't think so.
Okay.
I haven't had anyone complaining about that, so I don't think so. Not FBI, it's FIB. FIB. I think we should. Yeah, I don't think we're gonna be streaming throughout the Fed speech because it's gonna take a while to go through all of that. But definitely live until that starts at least. Then I'm gonna watch price action after the live stream to see what happens. Yeah, big and small letters doesn't matter, I think.
Yeah, after the YouTube session, this live stream, we will be having a workshop in our Discord. The 5ers has not only this live stream, but we also have a very lively Discord community. Not only a community where you can come and share your ideas and and meet each other, but actually we're also giving educational content there, right? So we have every weekday we have a session in there where we go through the market, we take live trades, and we you can come in these workshops. They are there to help you to grow as a trader. So you can come in and have discuss your issues if you're having issues with your trading, your psychology, your risk management, and we will go through them as much as we can and give you, you know, those feedback almost one to one. Of course, it is not one to one because we're in a group, but you are there. You can interact with us, and we will be sharing and looking at your setup if that is something, if there's a request for that. So do come into that Discord room and Discord community. And the only way you can get access to our Discord room is through buying an account at the 5ers. You don't have to do anything. It's not a subscription for our Discord. You don't have to, you know, pay monthly for getting that education. But the only thing you have to have is a buy an account, get a into the dashboard, which you will have after buying an account, and in the dashboard you will have your Discord icon where you can click on and get access to the community, right? So it's a it's a no-brainer. You can get almost unlimited amount of education guidance as you are growing as a trader.
Yeah, it's a really good opportunity to. It's a really good community we got going this year. The Discord has really been growing quite rapidly, and we got a lot of good good content in there. And like Sales Wealth says here, Victor, you have been killing it in Discord. Great job there. And I gotta agree, it's really really good content in the Discord. So definitely check that out. Okay, is it possible to have the giveaway before and you? I missed a trading. Um, should it matter? Should it? I don't know. We can't have a set point for the giveaway. It's gonna be a bit different in every live stream because we want to make sure that the people actually getting the accounts are people that are watching the live streams. So sometimes we're gonna do it like an hour in and then 2 hours in, and you just need to make sure that because otherwise people are just coming in for the giveaway. We want to make sure that we actually give accounts to people that are loyal followers and subscribers to the YouTube channel and the 5ers. Okay. Let's see. When is that speech coming up? In 23 minutes exactly. Okay, so let's see if we can.
Yeah, that's the chairman. So we should watch out a little bit what the market will do right before
look
it,
at that.
right after it.
Stop me out on USD stop me out here on that. Well, it's not that is not a surprise though. It's been ranging here quite a lot. My stop loss was very tight, so that's not surprising at all. However, on the daily I quite like this setup, but there's a new opportunity here. There's definitely another opportunity where I'm gonna be looking for a short here. So the next trade is probably gonna be looking like this, probably the same stop loss. So instead of a 4.5, it's going to be a 2.6. It's still a good trade. Yeah, so I'm going to be adding my alert here. I'm going to look for break and retest here on the on this daily level where I got that one. That's the level. I'm going to be looking for break and retest of that one for a short.
Nice. Very nice.
Let's see what gold is doing. We had a powerful move on gold. Yeah, this looks so bullish. Gold is very, very bullish. I can't really see. I think for me the entry is. I don't have a clear entry on this. Not really sure what I'm looking at here. But I just know that it kind of feels like it's going to move higher. And the like this level, the local high here is Seems like a really good TP area. But I feel like, now let's look at the lower time frames. Yeah, I feel like all the opportunities for me to go long here is gone. I would have either this to be the trade, but I'm gonna get stopped on that one, you know, with the Fed speech, definitely. I think the best trade for me would probably have been this, and that's a 2.4 hour trade. That's, yeah, I think that would have been the trade I was looking for. There is of course this level right here, so there might be another push to the upside, like this, and
Yeah, the
then
thing is,
perhaps maybe, but that's going to be only 2R. I don't know, but yeah, you know what? Maybe. What do you think about gold?
I'll I'll start looking at it right now. Let's look. I will switch my screen to that and share my screen. Let me check. All right. So if I look from the higher time frame, even we're in a very bullish, obviously on the higher time frames. This is almost straight up. There's nothing on the monthly. On the weekly, what we have is, after we had this huge run up, we started forming weekly bearish structure, but bullish as well. So that could be a indication that we might be ranging in the coming weeks, or that this bullish, since we are in a bullish market outlook, market structure, will be the turning point for it to break the weekly, right? The bearish one. If you go to the daily, what do we have? We have a couple of structures, which is it been forming bearish structure while we have a very powerful move from the downside. So what does that tell us? Well, we it might have a ranging character in the coming days, because these order blocks, these bearish order blocks are, they are the sign that the sellers are coming in. But it doesn't mean it's necessarily going to do this. But this is one scenario that I'm keeping into as a possible scenario. What we have as well is, if you look at this, let's see, what I would like to see is, how does PA form when it gets back to this order block, right? Does it start forming bearish structures again? If it does that, then it's likely to be pushing away, maybe after it takes out that little high, this high perhaps, or even this one. But if it doesn't, right, if it doesn't show those reversal signs, then this could be just a continuation play, right? And break these structures and continue to go. Let's go to the lower time frames. What I see is, we have a bearish order block, which is very fresh, which was formed yesterday. And if we go to the 4 hourly, we have a couple of order blocks that have been formed, right? So there are structures that could stop, or at least make price stall for some time, right? These are on the H4. So we could have, I don't know, when we get there, right? I would expect price to have some kind of, let me get this straight, some kind of reaction. And depending on how price action behaves when it gets there, that will be the cue for me what to expect. If price is having difficulty breaking this, then I would expect something of a double top, and then perhaps coming back before it continues to maybe try at another time, or just go much lower and retest some structures below. So it's still uncertain. But if you look at the market structure, we are in a bullish market structure, right? After coming down, we are now making higher highs, higher lows, and this is quite strong, right? So from this push, right, from this push we have had, this is just a retracement, right? So the current on the H4 current market structure would you would expect that this is going to continue, but considering everything else, I'm a bit cautious. Then again, on the higher time frames, gold is very bullish. So I, even if it just continues to break all these bearish structures and continue up, wouldn't be at all surprising. So what I more concretely, what I will be doing today, if I were trading gold, which I am not, is it just formed this bearish H4, and we have on the 1 hour, we don't have a great area to get in. We have this big order block, which doesn't help us. So I need more data, but I would like for it to come back and retest this order block and then continue. And probably that would be, if I were as in a day trader, that would be one move that I'm interested in, because unless I know I have more data as the PA, when it gets up here, I shouldn't be, have an idea that it's going to break them, right? It's coming from one H4 going to the other H4, right? Remember what I just said? The market typically moves from one station to the other station. Structure, I call them station, but structures in the opposite direction in the same time frame or something bigger, right? And we are in a daily, right? This bigger order block is a daily bearish order block, right? So it wouldn't be completely surprising for price to having some difficulty, perhaps come back after it reaches these order blocks before it continues, right? Because that is what I know what order blocks do, right? They make price move away from them when price comes back to retest them. So that is something I would be looking for, but surely it does look bullish, and price action is bullish. It's making higher highs, higher low. Market structure is bullish. So I'm looking for that. And not only that, remember what we saw on the dollar index, right? Dollar index telling us that it's going to be much likely for price to go much easier for price to go much lower, the dollar to go lower. If the dollar is going to go lower, guess what will happen with gold? Gold will be going much higher, right? Based on the DXY. So if you consider all of that, I would be going long. Depending on your time horizon, I wouldn't be targeting much higher, unless of course you're a swinger and going for higher structures, higher time frame structures.
Right. So I'm looking
So
at um I'm going through some macro stuff here, and it seems that the interest rate probabilities with the
okay,
Fed is pretty much unchanged after the PPI,
okay.
which
There is
it
a
seems like. Yeah,
go
go
ahead, go
ahead.
ahead.
Go ahead. No,
No,
go
actually,
ahead.
you were going because I was gonna say something else. So maybe you should finish what you said before.
Yeah, so I've gone through a couple of sites here. Some people that I follow for, they trade based on fundamentals, and they're not really expecting anything new from Powell. Which, if there's nothing new, nothing unexpected, then prices should continue in the current direction that we're seeing. But they're starting in about 10 minutes, so we'll see. Yeah, we'll see what we have.
Sure. There was a comment I wanted to respond to. Someone asked, let me see if I can find it quickly. Um, in the meantime, I will put the secret code on. I think I missed that, but it was someone who was asking if we had mentorship in the at the 5ers, and let me see if I can get that on. Uh, yeah, I can't find that. I think it's this one. Yeah, there you go. This is the comment we had from a viewer. Says he's struggling a little bit and was asking himself if the 5ers offers mentorship. We don't offer mentorship. The 5er is a prop firm account. So it's not mainly focused on education, but we do have if you get on the website, if you check the YouTube channel, and in the dashboard, we have a VOD section of video on demand, where we have loads of information, loads of videos on trade plan, how to build your trade plan, different setups, psychology. There's a course there. So we have a lot of education to offer you guys. So we don't offer mentorship, but we do have a lot of tools, education, content to help you succeed in your trading journey. And that is without mentioning Discord, which I just mentioned. Discord also, we help each other. We have a great community helping each other with tips. Also, other people helping each other, and the moderators there are doing their jobs with sessions, workshops, etc., for the growth of the community. So we don't offer mentorship, but we do offer a lot of education. Let's see if I can put on. Yep, that's the secret code. Come on, guys, hit the like button so we can have more of you winning prop firm account completely free. Where do you get that opportunity? This day can be
definitely
the first
hit the
day.
likes, guys. We're at 566. Want to get the number up. Our goal is 700. I don't think we're gonna hit 700 today, but let's try. But I definitely want that number to go up. We should hit at least 600, which means six accounts to give away. But please hit that like button so we can increase the number of accounts to give away. So it seems that Powell is not going to speak at the Federal Reserve. He's actually going to speak at the Foreign Bankers Amsterdam. So he's not. It's not a regular Fed speech. Let's see. Yeah, okay. So I shouldn't be focused on that, but I'm way too obviously way too invested in. Way too invested in this trade right here. As you can see, it's very close to my TP here on EU. Let's switch over here. I think what we have here. Look at Euro AD. Yeah, let's look at Euro AD. Yeah, it's not looking. I have a long position open on Euro AD right here, which, as you can see, not doing great. But on the daily, I still think there's a possibility here. Hopefully, we'll see something interesting here with the speech coming up. Might push Euro AD to the upside as well. Hopefully. No, I'm not going to take profit. I'm not going to take profit. So I might. It might. Might sound like a bad idea. Not taking profits here, but I have to follow my plan, and my plan all along was to set and forget. And if I can't follow my plans, then I'll, selling here, or taking profits here, is obviously not a super bad idea. The reason why I'm not doing that is because I need to make sure that I follow my plans, because the next time I don't follow my plans, that might not be a good decision. And there's a lot of people in the comments saying like, I gotta increase, gonna increase the stop loss, but why? Why? Like, why? Because if I'm honestly, like 99% of you if you're in a trade like this, you're probably moving your stop loss because it feels good to do so. I want to make sure that I'm not trading based on what I feel I should doing, and more of what's actually worth doing.
Yeah, and your trade plan is based on data.
Yeah.
Right. The trade plan is not there because creatively you thought up it. Right. It's not because you agreed that this is the trade plan and that's it. No, it's because the data is the basis for that trade plan, and the data tells you when to do what. and you shouldn't think you're smarter than the data. The data, you should follow the data. If the data tells you not to move your stop loss, then that's what you should be doing. You shouldn't be thinking, oh no, let your emotions weigh in and think you can have a better judgment because you feel this way or the other way. That's the importance of having data. When you have data, you can be at ease, you can be calm mentally, because you know that you might not be right this time, but in the long run you have a better chance than just doing whatever feels right. Sometimes the data lets you do things that doesn't feel right, but the data
Yeah.
doesn't lie. I mean, if you did your back testing and your analysis right, then that is what you should be doing, even if it's counterintuitive, right? A lot of times it is counterintuitive. Sometimes my signal tells me to go long where everything is short. It looks horrible, but that's the trade plan, and that is what I'm planned to do, because that I know from the data that that is profitable to me. So that's the only thing. I'm as the trader, I'm only there to execute my trade plan, not to be smarter than my own trade plan. Chair Powell's speech in 5 minutes, according to my FX book.
Yeah. For those
That
asking
should
about the
have.
code, it's FIB 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 FIB. So go to the pinned comment. So this is
Someone
actually,
also
I think,
asking, where's Alex?
yeah, Alex is
Alex,
busy working on secret
Alex
stuff,
is
super secret, highly top
is
secret stuff in the
top
office.
secret at Area 51. No,
Yeah.
but he's productive, busy elsewhere, and he will be with us soon again.
Yeah, the code is not FBI, it's FIB. Okay, so we have, okay, guys, trust. I like comments like this. Trust me, bro. Trust me, you should be selling right now. Yeah, should be selling ERU USD. Let's go.
Yeah,
Yeah,
well,
Alex is Alex is at the Lamborghini
convention.
dealership buying a new
Oh.
tractor.
Someone is asking, how many months does it take to be profitable?
Months.
Right?
I think you should look at years instead of months.
Yes.
That's more
Yes.
realistic.
If only it was months.
Yeah.
It's completely dependent on you, your effort, and a lot of other things. Like how diligent are you, how disciplined are you, how dedicated are you, and what kind of steps you take. Do you try to figure it out on your own? Do you go the right way right away? Because you can lose a lot of time trying different things that don't work or are not efficient to getting your edge. So do you have a mentor or a teacher or someone you can ask for help, someone who can guide you the way that can cut your time to profitability? um, and yeah, it depends on many factors. It's difficult to say. Some people do it in my case, it took me 3 years. I don't know you, Jonathan. Other people do it in very little time, but everyone is different. I don't think there is like a fixed number, the number of months that you could say. I would say plan on it not being months, but prepare for it being a couple of years at least, and that is doing it really dedicated to it, not just part-time, really dedicated. And the first thing I would say is start with the data. A lot of people start thinking, back testing is not sexy, it's not attractive, I don't like back testing, it takes so long, I want to be in the market, that's exciting. Back testing is dull, is boring. But it's in the back testing, it is in your measuring things that you will be finding your edge quicker, right? It looks like the slowest way, but it's the quickest way for profitability. It's your back
Yeah.
testing, is your measuring in the market, measuring the maximum favorable excursion, what I just mentioned, right? If you have a signal, measure how far it goes during a specific period, right? Build your system based on that data, right? That is already a golden rule. If you do that, you can shortcut and be much more quicker in getting to profitability. But even when you have that system that is profitable, then you need to find, you need to develop your psychology, your mindset, your routine, your habits around being there, that trader that needs to be executing that trade plan in day out. So that's the next level. So the first thing is building your system, then building your psychology, building yourself as a trader. And between all those, the whole journey, you also have to have, things like risk management. So it's going to take some time, a couple of years, I would say.
Oh yeah, it's going to take a long time for sure. All right, so we have Powell is seems to be slow. I'm not seeing him.
It's in 5 minutes, huh? It's in 5 seconds. I mean, sorry. Now is
but he's not.
is the time of the speech, and the thing with the speech as well. It
I
is
can't
during the
find him
speech.
though. Like, he's not here.
You're.
Are we? Am I
Well,
looking at the wrong thing? No,
I'm not sure, but the thing with speeches is that it's not like a number that comes out at a very second, the time turns to that specific time, but it is a speech that may take a couple of minutes, and in between he may say something, a remark, a comment, or a certain phrase that moves the market. And that can happen like 5 minutes after the beginning of the speech. It can happen 20 minutes in, and you never know if that's going to happen. So the news, the price action of a speech is different than from releasing of numbers, which is a very specific moment that it's known. And
yeah, but the speech haven't even begun. There's a lady on stage talking about other things. We'll see. All right, guys, we're gonna see if we're gonna wait for Powell to get on, start talking, and then we're gonna be selecting the number of accounts that are gonna be given away. So you have time to get it up to 700. So let's get that number up to 700 likes while we wait. I'm currently watching the speech here with Powell's. Right now, I'm just seeing donuts. Literally donuts.
Donuts.
Yeah, there's an image of donuts.
You
can Google for annual FBA meeting. It's the annual FBA meeting, which is the foreign bankers of the foreign bankers Amsterdam. So I guess they're in Netherlands talking right now. See what we can get here. We're seeing some, we're seeing price action, but this price action that we're seeing right now in the 1 minute has nothing to do with Powell, because Powell is not speaking. I actually have 2 live streams on. Let's see. Look at the new one. I'm gonna be posting I'll post a link in the comment section for the live stream. You can see it. Yeah, donut, definitely important part of any meeting. I think that move to the downside, that was definitely the donut images. You have like thousands of people watching, and they're like, "Here's a donut. Here's a donut." It's like people wasting a lot of money on this. All right, let's continue to push that number up, the likes, because in just a minute we're gonna have Fed Chair Powell start speaking, and he's going to pump the price of EU straight up to my TP, which is, why is it dumping though? Like, why is
Maybe
stop selling?
I don't know. No, it's still. If you look, I will switch to my screen. This horizontal line is actually the last swing high. And if we look at that, if you use that swing high, you can see that it's been holding that breakout quite nicely. It broke out, went back, retested that breakout, and did not, significantly go below it on the second time around again. So to me, it's holding that breakout very, very nicely. And it most likely, well, it's difficult to say, but it looks like it wants to do that. But of course, it's new, so it can, quickly go up before it continues to go quickly go down. I should say, before it continues its path.
All right, here we go.
Right, the market
Powell.
tends to. Is he speaking?
Right, let's see. Can he? Yeah. Okay, he's going to give a brief summary of the US economy. Here we go. Let's go, Powell. Pump it, pump it, pump it. Right, US economy has been performing very well. Okay, the economy is strong. A strong labor market, which that sucks. I mean, we want a weak market, right? We want a weak use market.
Well, it's the usually with the it's whatever they say at the speeches that makes the chances of a interest rate cut higher or lower. So it depends on that expectation. I think this is how I see it. What moves the market? It's that expectation. Does this, whatever they say, either bullish or bearish for the economy, but will that translate into lowering the interest rate or not? Because if it is, then that's going to make the market move.
Yeah. Okay, so he's basically saying that the US economy is very strong, the labor market is very strong, and a strong US market means lowering the chances of hiking rates, I guess. Well, not a lot happening here. I mean, there's no explosive moves, which is good. I mean, interesting enough as well, you see in 1 minute that price came down and hit the 50% fib right here. I want to remind you guys to hit the like button. Remember to hit that like. Very, very important. You hit the like, you win accounts. That's the deal. They're talking about how the US economy is strong and inflation was high and it's now much lower. Let's look at S&P 500. Not much happening here. We got Nasdaq. Well, I wouldn't really say dropping. I can't really say this is what I would like to see. Something's dropping, but well, whatever this guy is like, he's talking a lot, and please continue. Continue with whatever you're saying because it's obviously working. If you could just say
EU has been
USD
forming. Go ahead. EU is forming on the 1 minute bullish structure, making higher highs, higher lows. So that looks promising, but that's only on the 1 minute.
Yeah.
So if that is is going to be the result of the speech, then by all means continue doing that speech, Mr. Powell.
Yeah. No, I think this is good. I think we yeah. So this is this. I think this is the reaction. I think this is the reaction. Yeah. So yeah, I think this looks good. All right, guys, we are at 654 likes right now. I'm gonna shut down the live stream. Not this live stream. I'm gonna shut down the Fed Powell live stream, and I'm gonna hope that he continues to talk for a while and let that stop loss, that TP getting hit. Because, like, honestly, with the news, we saw a pretty looking at this 1 hour candle, I would say that this is very, very bullish, you know, basically just a pause in the trend. And you look at the 1 minute and you see the reaction to him, you know, when he started talking. And I would say that this is yeah, the trend continues. What happens with the Euro AUD? Not looking as good, Euro AUD, but I haven't. This trade is actually based on a daily. I shouldn't even be watching any other time frames than the daily. All right. So what we're gonna do now is I'm gonna write to Alex that we have 600 likes. We're gonna give away 6 accounts, and then we're gonna be drawing those accounts in tomorrow's live stream. Because I cannot enter the Gleam account from my desktop, then Alex has to do that, and Alex is back in tomorrow's live stream. So we're going to be doing 2 draws, 1 for today and then 1 tomorrow, and we'll be doing everything in tomorrow's live stream.
Nice.
All right, guys. Let us know if you have any questions, anything before we go. Yeah, if you win, you will be you will get an email. No, today was not useless. You've entered everything in the link. So it's gonna be a
your submission is not lost. It's just moved to tomorrow, and tomorrow there will be 2 drawings, so nothing is lost.
Yeah, the entries that you did today will be 1 separate draw. So it's going to be 2 giveaways tomorrow, and one of the giveaways is going to be based on today. So if you're not in today, you're not going to get into the giveaway. So tomorrow you don't have it's yeah, you know what I'm saying.
And not only that, but of course, you guys, I know the giveaway is great. It's a great opportunity for a free account, prop firm account. But between you and I, right, the content, the educational content is perhaps even more valuable because you can, use that for the rest of your life. So, but yes, tomorrow you will get the drawing and see what happens with your submission of today.
Wow, look at that.
Looks very, very nicely without, the violence of news. Looks very nicely bullish.
Nicely bullish. Yeah, that's a good one. Nicely bullish. And on that nicely bullish note, we are going to end the live stream today. Thank you everyone for joining, and we hope to see you all in tomorrow's live stream. It's going to be the same time, and that should be, is it 8 8 I can't remember. What is it? 8 or 9 Eastern?
It's 8.
Should be 8. 8, yep, yeah, it should be 8. All right, guys. Thanks for joining. See you guys tomorrow.
Bye-bye.
Hi, guys. So thank you very much for watching the video. Now, make sure you like and subscribe. And most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next